Welcome to our channel, the Market Pro Psychology. In today's video, we'll talk about emotions, how to control emotions. Please subscribe to this channel, watch the video till the end, because as a trader, you will definitely enjoy the video and it will transform the way you trade. Now, every trader knows the feelings. Fear, when a trade goes against you. Greed, when you want just one more win. Frustration after a loss. And the excitement that clouds your judgment. What is the truth? The truth is that emotions are the number one reason traders fail. But here is the good news. Emotions don't have to control you. In this video series, we will break down the secrets consistent traders use to stay calm, disciplined, and confident, no matter what the market is doing. Stick around, because if you've ever struggled with emotional trading, what you learn in this series can change your trading career forever. And you should know that this is the first video in the playlist series. Kindly subscribe to this channel and hit the notification bell for you not to miss subsequent videos of the series. The question here is, why do emotions rule traders? Have you ever wondered why traders blow up their accounts even when they have a solid strategy? Why do people who know exactly what to do still do the opposite in the heat of the moment? The answer isn't about charts or indicators. It is about emotions. Fear and greed move the markets far more than any technical setup ever will. Now, what are these fear and greed? Fear and greed are just survival instincts. Think about fear and greed. Every trader has felt them, but these aren't just random emotions. They are ancient survival instincts. For example, fear kept our ancestors alive. Now, if you saw a lion in the bush, fear told you to run. What about greed? That was the drive to collect more food, more resources, because the next hunt wasn't guaranteed. Now, fast forward to today. The same instinct that once saved your life can now destroy your portfolio. Take 2008 as an example. Plenty of people owned good companies, the Apple, the Amazon, even the banks, and many shares. But fear took over. They sold at rock bottom prices. Later, when the dust settled down, those same stocks went on to multiply in value, and fear made them cut winners before they even had a chance to. So why does this happen? Let's look at the brain science. The cortisol and dopamine pathways. When your trade moves against you, your body releases cortisol, which is the stress hormone. Cortisol narrows your focus and screams, danger, danger, get out now, get out now. It starts screaming to you. That's why so many traders panic sell at the worst possible moment. And when you win, that is when dopamine shows up, the brain's reward chemical. It feels amazing. And here is the dangerous part of it. Dopamine makes you feel want to repeat the behavior, even if the risk doesn't make sense. There is a famous story of traders during the dot-com bubble. People quit jobs, threw their savings into internet stocks, and doubled down every time prices went higher. They were not trading, they were chasing dopamine. And when the bubble popped, most of them lost everything. So it is not logic driving this decision, it is brain chemistry. Then why traders sabotage their own strategy if they really knows what to do in the market? Yes, most traders knows what to do in the market, but they end up sabotaging their own strategies. Here is the $1,000,000 question. If we know the science, if we know fear and greed exist, why do so many traders still blow up their accounts? The answer is that emotions override logic in the heat of the moment. Most traders don't fail because of bad strategies. Yes, most of the traders do not fail because of bad strategies. They fail because they cannot follow their own plan. Fear makes you cut your winners short. Greed makes you move your stop loss further away. And because of our natural hate of losing, we hold losers until they explode. So as a trader, you need to follow your own plan very well. Take Bitcoin in 2021 as an example. Tons of people promise themselves they will sell when it hits 50K. But when it did, greed said, no, it is going to 100K. It is going to 100K. They ignored their own strategies, held on, and rode it all the way down to 20K. And then there is revenge trading. You take a big hit, you feel angry, and you jump back into the market to win it back. Ask any trader who has blown up an account. They will tell you one loss turns into 3 and subsequently to 4 to 5, and suddenly the account is at 0. What happens? So here is the takeaway. Here is the truth. In trading, your biggest enemy isn't the Fed, isn't the Wall Streets, and isn't even your broker. It is yourself. Yes, I said your biggest enemy is yourself. Because fear and greed will always be there. You cannot delete them from your system. They are hardwired. But here is the good news. You can build systems to protect yourself from yourself. Risk management, journaling, exercise, meditation, and following the routine. These are the guardrails that keep your emotions from hijacking your trades. So, think very well. Act on your emotions before they act on you or against you. This is all about this series, this video. And in the next part of this video, or in the next part of the series, we are going to break down exactly how professionals train their brains to overcome these survival instincts and trade with discipline instead of impulse. So stick around, because once you understand your psychology, the charts finally start to make sense. As I said, subscribe to this channel, hit the notification bell for you not to miss out. The next series will be very fantastic, and it will show you how professional traders train their brain to overcome this survival instinct, that is the fear and greed. Thank you so much.